So on Text Invest, we'll talk about investing, finance, and professional development. For today's video, it's only. The investment we'll talk about today will be Ethereum ticker ETH. First, I just want to say happy Wednesday, everybody. Hope everybody had a great week so far. With respect to Ethereum, as of this morning, as I'm recording around 10 a.m. on the East Coast, it's kind of trading around like the $2,450, down about 2.9% at the moment, ever since that high we had yesterday on Tuesday, around like the $2,550 mark, right? With respect to the two catalysts that we had during this weekend on Sunday and Monday respectively, the two catalysts, one was that Elon Musk's proposition around potentially adopting Bitcoin again as a form of payment solution, despite the contingency on the renewable energy source of those mining of those respective Bitcoins, right? And the other catalyst was the Michael Saylor from MicroStrategy decided to sell $1 billion of stock into allocating to purchase Bitcoin again, right? But with respect to the exact amount or the price level that they decide to buy, or when are they going to be buying, that's still up in the air at the moment. We still need to confirm and verify going forward. So despite those two, relatively, non-substantive, if you may, subpar catalysts, it drove some buying pressure across the whole crypto market, right? Directly to obviously Bitcoin, but with some drag effects, with the same correlation effects to Ethereum as well, right? Which was subsequently drove up from there. And with respect to my technical analysis video that I posted yesterday, we understand that the substantiveness and the consolidation level at the higher level of the $2,550 is not as substantially consolidated or supported in comparisons to the current level that we're trading at right now, which is the reason why we kind of consolidate at this level right now and coming back down. And with respect to one of the major catalysts that we need to watch out today would be the FOMC meeting that we'll be hearing from the Federal Reserve, Jerome Powell, later today around 2 p.m., I believe, or 2:15 p.m. on the East Coast. We will be learning more about the Federal Reserve tapering, right? The quantitative tightening proposition that we'll be understanding more, right? Around potentially slowing down the purchasing of the $120 billion for mortgage-backed security from the Federal Reserve that we've been doing or enduring for the last 1.5 years on a monthly basis to sustain our economy, to sustain our livelihood, and obviously sustain the corporate operations on a cash flow perspective, right? Which subsequently propel our stock market to go up from there, right? So with respect to this catalyst, I guess it drove some fear among the equity market yesterday, which subsequently drove some sell-off. But despite the fear, we, on top of the fact that crypto has had a relatively green couple of days already on Sunday and Monday, we subsequently drove some kind of flat level type of trading sideways consolidation momentum. So I'm going to go through a technical analysis to see, with respect to this catalyst that we'll be seeing going forward on the FOMC meeting today, if we're going to go to the negative side of the pressure, or if we're going to go to the positive side of the pressure, how will this play out in a technical perspective, right? So I'm going to go through a technical analysis to look at the resistance level to look out for, in case you want a dollar cost average or you want to buy it for the first time, and my price target for you in 2021 as well. So stay tuned, stick around, let's make some money. So moving on to the technical analysis for Ethereum, ticker ETH, let's just take a look at the equity market real quick to see how it anti-correlates with the crypto market real quick, right? You can see that SPY for S&P 500 is kind of trading sideways right now on the 0.06% downward, while at the same time NASDAQ is kind of up about 0.34%. So kind of net cancels each other out. You can see that on Tesla, it's kind of trading sideways at the same time. And NEO, same thing, right? Kind of trading sideways. We're down a little bit, knowing the fact that this is a growth stock, so it's a little bit more volatile in comparisons to more like a pseudo type of industry index type of stock like Tesla, right? Knowing the fact that the market cap for this company is so vast, right? And with respect to, you see that Ethereum is currently down about negative 3.09%, which, if you think about it, on the equity side, it's kind of net positive if you think about it that way. So that kind of anti-correlates. And also on top of that, we have to understand the adjustments for the weekend, right? We know that we have had two subsequent green days, right? For Sunday, we were up about 7.5% with that Elon Musk news, right? On Monday, we got a 4.5% pump because of the Michael Saylor MicroStrategy news, right? So those two catalysts kind of net cancels each other out. So we're kind of trading on a sideways fashion right now, right? Which is a reason why we kind of retesting at the $2,450 level, which I keep mentioning. That is a strong psychological substantive resistance level that we've been forming, right? Not the 2,550, not the 2,650, yes, the 2,750, but not anything in between, right? Because like we're not really floating up in the air. You have to bounce the ping pong ball either up to the floor or to the ceiling or to the ground, right? You don't just like float in the air and expect that some form of, I don't know, physics abnormality that will happen to reverse the ping pong ball by itself, right? So same principle in the inertia perspective, right? And that's exactly what we're seeing right now. And we're just kind of hovering sideways despite, showing us is down. But we basically just net cancels each other out from the past couple of days to today ahead of the CPI, not the CPI report, the FMOC report that's coming out, right? So what I see going forward, I think the investment sentiment is definitely I would say more neutral at the moment, right? On both the equity side and the crypto side, we don't really have an indicator at the moment, right? I think based on my understanding is that the quantitative tightening or the tapering is basically the topic of discussions of today, right? But with respect to how severe this affectation will be into affecting the market, I would say, today would be just a early taste or like a quick taste or like a brief introduction on what is coming. I don't think we will have a confirmatory statement from the Federal Reserve that yes, we are going to be quantitative tightening. Yes, we are going to stop purchasing these mortgage-backed security, $120 billion a month to support our economy. I don't think Jerome Powell is going to say anything that specific or that confirmed. I think we're going to hear more about, in the later months as we learn more in the subsequent August FMOC meetings, September FMOC meetings, the Jackson Hole meetings that will be coming up in the near future, or sometimes in Q4 even maybe. But I don't think we will hear about that today. So I think yesterday reactions in the equity market was an overreaction. I think because when people hear like quantitative tightening or tapering, people are just gonna run for the hills, right? Because like, oh my God, you're gonna cut off my circulations of monetary policies. How am I gonna sustain my corporation? How am I gonna pay for my bills without the stimulus checks that we've been getting, right? How am I supposed to get a job right away? Right, people are gonna start freaking out, and when that happens, people are gonna start liquidate from the equity side to run to more the cash side, right, to sustain more cash balance within themselves, so they feel a little bit more secure, right? That's just like normal human psychology, right? While in respect, because of the fact that yesterday, despite the negative sell-off, we didn't really have a substantial pump on the crypto side because we have had 2 days of subsequent green days in the crypto side, right? From both two news, right? One, the Elon Musk news, secondly, the Michael Saylor news, right? So a lot of neutralization across the board on the macro side, which subsequently drives what we're seeing in front of us in the depiction, right? So I think what's going on is really logical. I don't foresee today is going to be a major green day for the equity side. I think it's going to be relatively neutral. I think once we hear more, I think the affectation from Jerome Powell is going to be relatively more diplomatic, if you may. I don't think he's going to give us any confirmatory news around the tightening or the tapering proposition. I think it's just going to give us a taste of what's going to be coming. He's going to lay out maybe the timeline, the plan of what's happening going forward. I don't think he's going to give us anything confirmatory. So I keep emphasizing, I don't think he's going to give us anything confirmatory. I think it's going to take time for us to learn more about the process going forward, because tightening or tapering is not something that is sudden, right? It doesn't happen all in one day or like in a week or in a month, right? It happens in a gradual perspective, right? Us, knowing the fact that the economy is such a vast entity, and with respect to the quantitative easing that we've been having for the 1.5 years so far, right? And now all of a sudden you're gonna say that with inflation. I mean, that's just a really dramatized media affectation that's trying to influence gullible investors again, right? So I think today is going to be a relatively neutral day. I'm leaning more towards the positive side on the equity side, which will subsequently drive some selling pressure on the crypto side. I believe people are going to ease into the affectation from the meeting, and then we'll subsequently have some slight rebound from the equity side after we hear the news, or like, not even news, like diplomatic news are not really confirmatory news. They just news to foreshadow something. You have to read between the lines for you to understand the true meanings behind what he's talking about, right? So I think today we're gonna have some positive pump up pressure, not like majorly, just a slightly pump on the equity side, and then on the opposition, we will have some sell off on the crypto side. And I think the level of the resistance would be, we are currently at the strong resistance level right now, so I don't foresee us to be shifting further any down, right? But I think there's a possibility that we will go down to like the $2,300 or like $2,250 as the level of resistance, knowing the fact that the trend is really going that way right now. We are kind of oscillating on a sideways fashion right now. And also on top of that, I drew a wedge for you guys with respect to the wedge that I've been talking about for the last 4 or 5 videos so far. You could see that the upward wedge is forming, right? You could see that the first escalator step, second one, third one, fourth one, and you could see that the oscillation, the swing is getting tighter and tighter and tighter, right? And some people have been asking me questions like, Maurice, like, we're going up, we are trading on an upward wedge right now. Why is that a bearish signal, right? And I want to talk about the concepts of like supply and demand dynamics, right? So when you forming more of an upward wedge, that basically indicating that more and more short-term investors are shifting more to the long-term proposition going forward. So more short-term investors are deciding to hold long-term now, right? While at the same time, because of the fact that if you look at the pool of investors that are long-term investors versus short-term investors, the long-term investors, composed of mostly whales or large institutional investors, right? And when these whales look at the price level of volatility, they see that the volatility is relatively minimal. It's kind of trading sideways right now. Contingent on like a negative catalyst, right? One day, one of those large whales is going to be impatient, right? And just like very simplistic perspective, right? Psychologically, people can be impatient when you see lack of movement, right? And when you see a lack of movement, and to a certain point that they run out of patience, that they decide to be like, you know what, I don't want to be holding the bag anymore. I made some good amount of money, but I don't want to be just like sitting in dead water anymore. It might make sense for me to allocate my holding into something else so I could chase the pump a little bit more, right? When you give them more market power, you give them more market influence to the price level at the same time, which subsequently will drive more of a propensity to a sell-off. And we see that sell-off, the sell-off is mainly driven by large institutional investors or a large whale. And with respect to the level that will potentially go down to will be the 1731 or the $1730 level, which can be possible, right? You could see that the wedge, the apex of the wedge, which is something that we're looking for, right? Like, when are we going to be selling off? I think based on the duration of the timeline that we see here, based on the normal cadence of logical wedge formation, I think the sell-off can happen sometimes around like early July. So not that far away from now. But we still need to verify if this wedge is really forming, right? Because if something happens today and we completely change the course of nature of this chart, right? Because of some really positive news coming from crypto side, or because of some black swan event that happens that I have no idea how to foresee, that could completely change the course of nature of this chart. Then we can go back to the chart and redraw the board from here, right? Then we will know. But based on if we're trending according to how we're trending, logically speaking right now, based on how the MACD is trending right now, you could see how fuses together. We're no longer having those separations. And on top of that, the RSI is kind of leaning more towards the selling side right now. That eventually we're gonna have to have some type of catalyst that's gonna change the course of nature a little bit, just like a logical perspective, right? Because people ultimately runs out of patience. People want to reallocate, or they want a sector rotate, or whatever that they want to do. And when that happens, it will drive some volatility into the market, right? So hopefully that's helpful in my explanations. That if you have any questions, again, feel free to reach out. I'm happy to like explain that a little bit more to give you guys more transparency. Just to quickly recap all the numbers in the technical analysis again, right? The 2,450 is basically where we're at right now in a market neutral level. So it makes sense why we are sustaining or consistently try to test this level, right? So that's a strong level as like a cushion for the market basically. And despite the negative pressure that we might or might not be seeing later today, contingent on the FMOC report, I think we might get to the 2,250 or like even like worse to $2,100 depending on how positive is the affectation from Jerome Powell himself, right, on propelling the equity market going forward. I would say the propensity is leaning more on the neutral side, not like a very significant, knowing the fact that inflations or like monetary policies or something that is quantitative tightening type of perspective type of things, or it just is a gradual type of process. It doesn't happen that significantly or that suddenly, if you may. So I think we might get to somewhere between those, like these two levels. I think we might rebound at the 2,250 or like the 2,300. I don't really foresee us to be hitting the 2,100, but if we do, that'll be a great level for you to DCA, right? And are we going to be going down to the 1750? I think the likelihood of like in the near term will be no. But I know the wedge is forming. I've explained to you guys what the wedge is looking like, and I think based on the logics right now, we might see that falling back to the 1750 sometimes about like early July. But that's just what the technical is telling me. I'm not a wizard. I don't know. I don't predict the future, but that's just the chart telling me, right? And with respect to corporate adoption, I still stand by my 20% corporate adoption, and with respect to that, would translate into a price target of 9,800 by year end, which subsequently generate 4 times your money from here, which is not a bad return from here. All right, so that's it for today with respect to my technical analysis on Ethereum ticker ETH. Hopefully, you guys find this helpful in terms of like how we're gonna be playing this market catalyst that we'll be seeing in the next couple of hours from now. I really appreciate you guys for dropping by. And again, with respect to any more questions about the wedge formations or any questions around how am I thinking about the psychological perspective of like how we're trading in the supply and demand dynamics level, yeah, feel free to ask me any questions. I'm happy to answer for you, in a timely manner. And please, again, hit the like button, subscribe button, also the bell notification, and watch out for the next video coming up. Take care.